The TFSA is by far my favorite registered savings account in Canada. It's a great tool that can serve various financial goals, from saving for retirement to funding short-term needs. Given its importance, it's beneficial to revisit its features and rules every year. So this video is a refresher, but it can be very useful for newcomers in Canada who may not be very familiar with the TFSA yet. Time to explore everything you need to know about your TFSA, including some lesser known facts. Let's begin. Starting with an overview, the TFSA, that stands for Tax-Free Savings Account, is a registered savings account introduced in Canada in 2009. The primary purpose of a TFSA is to encourage Canadians to save and invest by offering significant tax advantages. Basically, you get to grow your money in a tax-free manner. This account is available to all Canadian residents aged 18 or older. Please note, in some provinces, the TFSA becomes available at the age of 19. Let's move on to some facts about your TFSA. The TFSA contribution room is calculated based on the year your TFSA kicks in. Here's a chart showing the room that was available for each year starting in 2009. Please note your contribution room kicks in when you turn 18. For example, if you turned 18 in 2022, your current contribution room is a sum of the room for 2022, 2023 and 2024. Suppose you're somebody who moved to Canada from a different country, your contribution room starts from the year you moved. If you moved last year, your total contribution room will be $13,500. This is provided that you meet the minimum age requirements. To summarize, the TFSA room is calculated based on the current year's TFSA dollar limit, any unused TFSA contribution room from previous years, and any withdrawals made from the TFSA in the previous year. We will circle back to the last part. Here's an important point to note. Your TFSA contribution room actually shows up on your CRA account. However, it's highly recommended that you calculate your own TFSA contribution limit. This is because CRA often shows the wrong TFSA contribution room limit. This is something that has actually happened to me and a lot of my friends too. You can actually get it corrected by talking to somebody in CRA. This is a known common problem for immigrants who hold a 900 series social insurance number. So remember to make your own calculations when it comes to your contribution room. Now let's talk about deadlines. Unlike the RRSP and FHSA, the TFSA does not really have a deadline. You can contribute at any time as long as you don't exceed the contribution room. And as stated earlier, if you do not use your full contribution room, you also have catch-up contributions. This basically means that any unused contribution room from the previous years gets carried over to the next year. If somebody has held a TFSA for the last couple of years and has not used it, they will have a lot of contribution room today. Hopefully you're not one of them and have already been making use of it. Talking about making contributions, it's very important for you to regularly track your contribution room. This is because CRA is not tracking your contributions in real time. The burden of that falls on you. If you're not very organized and do not track things properly, it could lead to penalties. Talking about penalties, let's talk about overcontribution as well. If you contribute more than your TFSA contribution room allows, a penalty of 1% per month can be applied to the excess amount. This penalty is actually a form of tax. If you don't want to overpay in taxes, make sure you never overcontribute. There is also one more thing about contributions, that's spousal contributions. You can actually give money to your spouse or common law partner so they can contribute to their TFSA. Now they could have an income or have a lower income than you, but you are legally allowed to give them money for their TFSA. This is actually a common strategy adopted for income splitting, where a higher earning partner can effectively shift income to a lower earning partner. They can now invest this money however they want in their TFSA. Make sure to not overlook this strategy if you are in a similar situation. Now let's look at what you can hold in your TFSAs. A TFSA can actually hold a variety of investments, including cash, bonds, stocks, and mutual funds. The income earned from these investments, including interest, dividends, and capital gains, are generally tax-free. However, there are a few situations that you must know of. But before that, there is a question of how do you hold these different assets in your TFSA? You might be confused because the institution you have your TFSA in may not offer all these assets. Actually, the main question is how many TFSA accounts can you open? There is actually no limit to the number of TFSA accounts you can open. You can have multiple TFSAs with different banks, institutions, and brokers. This is what enables you to have a diversified TFSA. For example, you can hold cash in high interest savings account in one bank, where you have one of your TFSA accounts. However, with another institutions, you could be holding GICs, which is in another TFSA account. And you could be buying stocks on a platform like Wealthsimple, where you have another TFSA account. This is the best way to diversify your portfolio when it comes to your TFSA. TFSA. The most important thing to note here is that your total contribution in all your TFSAs should not exceed your total contribution room limit. So if you're holding multiple TFSA accounts, make sure you're tracking them properly. Make sure to have a well-diversified portfolio that helps you grow your wealth. Talking about wealth building, are the gains in a TFSA truly tax-free? Generally speaking, yes, all the capital gains in a TFSA are tax-free. However, there are a few exceptions. For instance, dividends earned on US stocks held within a TFSA are subject to a 15% withholding tax. This tax actually goes to IRS and not CRA. The reduced 15% rate is a result of the tax treaty between the US and Canada, which aims to prevent double taxation and encourage cross-border investments. However, the capital gains that you earn from the appreciation of these assets are not taxed. Suppose you own stock A at a cost basis of $100. Let's say this stock pays a dividend of 4%. Suppose the stock pays $4 in dividends. Before you even receive this $4, a 15% is deducted from it before it hits your account. However, if the stock was to go from 100 to 120, you will not be taxed on the $20. Before moving on, there's one more point about assets you hold. It's important to note that TFSAs do not allow day trading. The CRA considers day trading to be business income, so it's not allowed in your TFSA. In general, you should not be trading in your TFSA. Now, this does not mean that you cannot do long-term trades. However, if you were to start trading every single day or multiple times a week, then CRA might take notice of it. And if you start trading multiple times a day, it's clearly day trading and will be penalized. I'll leave it up to you to figure out what's considered trading in Canada. However, just remember that TFSAs are meant for saving and investing and not for trading. Now let's look at what happens if you were to withdraw from your TFSA. This is actually my favorite feature of the TFSA. Firstly, as you know, it's a tax-free account, so even when you withdraw your money, you do not have to pay any taxes. Not on your contribution and not on the growth. You can withdraw whatever you want without any taxes. But that's not all. If you were to withdraw from your TFSA, you actually get the contribution room back in the following year. Might be a little confusing, so let's look at an example. Suppose in the last couple of years, you have contributed about $30,000 to your TFSA. Now this has grown to $60,000. Now, if you were to withdraw $20,000 from your TFSA, you can take it out and make use of it. In the following year, you will get a new contribution room, which will also include this $20,000. However, if you were to withdraw $40,000 from this account, the maximum room you can get back is still $30,000. Just keep that in mind if you are withdrawing from your TFSA. However, this is an important feature that not a lot of people make use of. Generally, as long as you take out the money before 31st December in a year, you will get back the contribution room in the next year. Here's something interesting that a lot of people do. In the beginning of the year, they prioritize their TFSA accounts. Once they have maxed out their account, they start contributing more towards their RRSP. If towards the end of the year, they're falling short of the contributions for their RRSP, they withdraw some money from their TFSA and contribute to their RRSP. This way, if they have played their cards right, they have been able to grow the initial amount from the beginning of the year, and they have a lot more to contribute towards their RRSP that in turn gives them more tax returns. Yes, this is a bit complex and requires a lot of planning, but something you should be aware of. That probably covers all the basic features of a TFSA. Let's quickly look at some other things as well. One important thing to note is that there is no income requirement to open a TFSA. Your contribution room limits are also not relying on any kind of income. As long as you meet the minimum age requirements, you get the contribution room and you can open a TFSA. Also, if you don't open a TFSA when you turn 18, the amounts still keep accumulating. Another thing to note is that you don't need to be a permanent resident or citizen of Canada to open a TFSA. So this means that even if you are a temporary resident, you can open a TFSA. So even if you are a student with a little bit of extra cash, you can start making use of TFSAs. In fact, it might be the best account to start off with. Again, the main reason is that you can take it out whenever you want without any penalties. Let's look at another point, that is the impact of TFSAs on government benefits and credits. It's not complicated because there are no impacts on any government benefits. Also, the income earned in a TFSA and the withdrawals from it do not impact eligibility for federal income tested benefits and credits. Again, generally speaking, it has no impact on any credits and benefits. You are free to use your TFSA however you like as long as you are following the basic rules. Let me share some interesting facts about the TFSA. It's a very popular account. More than half of Canadians have a tax-free savings account. According to BMO's 2022 annual savings study, 63% of Canadians have a TFSA. And the average TFSA holds around $35,000. I believe there are two main reasons for this. Firstly, the TFSA is a very popular investment vehicle alongside the RRSP. A lot of people are using it for retirement planning as well. You get enough contribution room, and if you make the right moves, you can grow your money significantly. significantly. And unlike the RRSP, you will never pay taxes on the money in your TFSA. So the TFSA actually comes with a lot more flexibility and the ability to make withdrawals whenever you want. Which brings us to the second point, that a lot of people are using their TFSAs for short-term goals. Again, because you can make withdrawals from your TFSAs whenever you want, it's great for short-term planning. For example, you could contribute to your TFSA, grow your money for a few years, then take it out without any penalty and use it towards a house or even a wedding. Also, it can come in handy in case of emergency situations. To summarize, it's one of the most flexible accounts that you have available. You can hold a variety of assets. A good mix of assets such as cash, stocks and bonds will help you plan for different scenarios. You can get really creative on how you want to use your TFSA. Well, that was a quick summary of everything you need to know about your TFSA. In the upcoming videos, let's look at RRSP and FHSAs again. These refreshes are great in the beginning of the year, so we can take full advantage of these accounts in the upcoming months. I'll see you next week with a new video. Till then, keep learning and stay on top of your finances. Until next time.